It's Greg Gallagher. Welcome to G3 Investors, and we're going to look at we've got another exciting day coming up in the markets. And I'm proud to say that not one single long-term G3 investor texted me or called me or emailed me in panic mode. This is what the market thinks is going to happen, and maybe it will, but we're prepared for it, folks. So got a real shout out here to Alex C. He's a new patron, tier 2. He asked a great question and it prompted this video. Okay, we're going to look at the trading that we've been doing on the short side. So we're going to concentrate on that today. Here you can see we only have one open position. If we look at the trading on the 11th, we got stopped out of our gold position. You know, when a market goes into a bear market, which officially we are in a bear market, that's what happens. Everything gets whacked. So you want to be out of the market if you can, or hedging your positions by taking short positions. Now, we had two short positions yesterday. We took a position in SQQ and TWM, and I'll show you how I trade. Again, this is an educational website. I'm not here to hold your hand and tell you how to trade. You have to decide how you put your orders in and everything. But I'm going to show you in this video how I trade, okay, how we trade at G3 Investors. And hopefully you'll learn from this, because we made a little bit of money on the SQs, shorting the NADX, and we've got a nice gain. And because the market is down the 5%, at least the futures are down 5% this morning because of all the panic. And I'm not saying it's right or wrong. I'm just following the market. I don't predict what the market's going to do. I'm not here to do that. I'm just saying, if you're smart, you'll trade or do some hedging or something to prevent these types of things from impacting your 401k, your IRA, or whatever you want to, whatever you invest your money in. So let's take a look. Okay, so here's the market. This is the NASDAQ composite, and you can see down here the little red thing. The DAX is down 7.39%. So does that say, hey, look, the market's going to open up for sure? It's going to gap down another 5% from here. 3 days down below the 200-day moving average. We are definitely in bear market territory. I think all the most major indexes are either below, they've either dropped from 20% from their highs, their recent highs, or they're very close. So everybody and his brother's calling this a bear market. Okay, let's take a look at the Qs. Okay, but instead of looking at it and again, this still pertains. If this thing reverses and we go up 10,000 points today, we'll get in at 210. It's hard to see that number. I apologize for that. But let's look at the futures. Whoa! So this is what happens. Okay, so this white section here is what happened yesterday. And this is a 2-day, 10-minute chart, which is what we use to trade on the short side. And I'm going to post some more information about going short, what they are, and all that later on. Okay, now, if this is what it looks like, what does the SQ look like? So the SQQ looks like this. So let's how did we trade this thing? Okay, and how do we make money? Well, again, when the market, I determined beforehand that we needed to get in about, I think I set it at 28 or 23.50, and it didn't quite reach it. Here it got to 23.53. Now, if you put in a limit order, you never got filled. Okay. but I don't do it that way. Okay. And again, this is simulation here. G3 is not, it's a training video. It's teaching you how to do it. Personally, how I do it, I do market orders. So I got in at 2360. So I put G3 in at it at 2360. Went up, come back down. So we made a little bit of money here. We entered right back in. We got right back in, got back out. Why did we get out? Well, I would give anything if I had stayed in. Okay, usually, inverse ETFs are only traded on the day, and you'll see the reasoning for that. But I got out. Why? Because it looked to me like it was going to go much lower. So I got out here for another gain, and those are the two gains that you saw. If I put it back up, we made 360 on the first, we made 660 on the second. You can look at all this. You can stop the video at any time and look at that. I'm just explaining. Whoops, what did I do there? Okay, that's one I want to show you later, and that's one I want to show you later. I am having all kinds of computer problems here. Okay, so let's take a look at TWM. Why do we still have an open position in it? Well, TWN, we had our buy set, and tier 2 investors had this. They get this every night or every morning before the market opens. Okay, and then throughout the day, if I get a chance, I'm trading several accounts myself, so I can't hold everybody's hand during the day. So I can, and when I can, I will do that. When I can't, you got to wait the next day. But you don't learn trading in one day, and you certainly don't want to learn it in a market like this where you've got, well, let's go over it. Monday, the market was down 7.3%. Tuesday, the market was up 5%. Wednesday, the market dropped 4.7%. And today, the futures are down 5%. Now, that's the NASDAQ. That's round percentages. I mean, that's trading that you normally see in a month or a week. And we're having it every day. That's typical of a bear market. Okay, so what happened? So we got in here at 1870, and it held, and again, I don't, just because it hits this line, this line is a guide, okay? It's the 20-period moving average on a 10-minute chart. It's a guide, and I just watch it go, and it just went, and it never really broke down below this, for 3 or 4 times. These are just bars or 10 minutes here. Okay, so it's not a long time. And guess what? It held at the end of the day. And I'm like, wow, hey, we got a big gain. What's the worst that can happen? Well, it could drop down 5% and we would have lost some of our gain, but we would have still made money. But hey, what happened? Well, the market panicked. And here it is. Here's the futures this morning. This thing looks like it's going to open at 23.31. So we're going to make some really big money. That's luck. It's not an exact science. Trading is not an exact science. So, that's what happens sometimes. Now, I'll go to my market monitor layout here. And okay, you won't be able to see all this stuff, but this is what's happening. Right there's the daily dashboard. It shows me what's happening with the E-mini and the NASDAQ E-mini and the S&P E-mini. And I don't trade those. I'm not, I'm just trading during the day. I don't trade futures and that stuff. There's a lot of people out there that do, but I don't. And here we can see that's our only open position, and we're up $1,300 on it. And, the bid right now is 23. So we're going to be up a lot more than $1,300. Okay. So that in essence is how it's done. Now, let's go back to the results here. Okay. So here's our results through March 11th. We are better in just 11 days, 8% that we were at the end of February. And we are absolutely crushing the market. Okay. There's no doubt about it. Again, thanks to Alex C. It was a great question. You can click on this link to become a G3 patron. And if you do, you'll see something like this. And this is Greg Gallagher. Oh, I forgot. I promised you. Okay. No, I didn't mean to do that. Okay, where's that at? There it is. Okay, sorry. Went the wrong way there. This is the this explains why we and how inverse ETFs or shorting ETFs work and why we use SQQ and TWM. And again, we only use these two because and one of them is a one for one short, but they're all based on derivatives and they profit from decline and it's a lot more convenient. You can do it in an IRA account. There's lots of good reasons why you do it. And that's why we do it here at G3 Investors. This is Greg Gallagher. I don't know how I chose the Down Under theme from Australia for this week, but it certainly was a premonition, I guess. Greg Gallagher, good trading and good luck.